I am genuinely furious. If this was anyone else, they would investigate you for it, they would challenge you over it, they would probably charge you the tax over it, and they'd probably punish you for not paying the tax over it. But because it is Angela Rayner, Deputy PM, it seems like she's getting away with it. And hypocritically, she's contradicting her own previous statements, which is what we call a previous inconsistent statement with the way that they are now acting. And this is, frankly, in many eyes, just unacceptable. And we also have Ripoff Reeves and her proposed or potentially proposed property taxes and all sorts of other taxes that may well sting you. And in the second half of the video, a stealth tax, which you may not even realize is going on. But at the very end of the video, what you can do about it, because this is a money channel after all. But let me show you the proof of why I think that she's being hypocritical here, because there are a number of tweets that I've seen. This is just one of them that I just bring to mention here. Angela Rayner, back in 2017, at Jeremy Corbyn, said, correct to raise tax dodging issue. The public are furious with those who get away with tax avoidance while they pay. So what are we talking about? Well, you've probably heard that she seems to have saved £40,000 buying her third home near the seaside, as she's been pictured in a dinghy. How unironic is that? And apparently has saved £40,000 because she's declared that as her primary residence. Now, many people have popped up to say, well, if that's her primary residence and not where her constituency is as an MP, surely that should have an effect. Now, reportedly, she's paid £30,000 in stamp duty instead of £70,000, which would have been applied if this was her second home. So despite her previous criticisms of people bending or using the rules to pay less tax, that's precisely what she's done. And so, such is the hypocrisy that is this government that is governing you and telling you what you should and should pay in most cases. Let's have a talk about what actually potentially is going to happen with property taxes. Now, the current rates of stamp duty, which have recently been hiked, are 0 for up to £125,000, 2% for the next £125,000, then 5%, then 10%, then 12%. But there are now reports or discussions, proposals that they're going to replace stamp duty with a national property tax. And here's why this should be alarming to you, because don't think for a moment that because you may not be in a house worth over £500,000, which is what this initial proposal is talking about, it will probably bite you in the end, and I'll explain why in just a moment. But if they were to replace stamp duty, that's some reported £11.6 billion raised from stamp duty in the last financial year that they will have to replace before they even make any additional tax revenue from it. And believe me, they will want to make additional tax revenue from it. And so if they did scrap stamp duty in favour of a national property tax and it doesn't raise enough or more than 11.6 billion, they will look for imaginative ways to expand it, which is then self-explanatory. So the national property tax, they are talking about an annual rate to be set by the government, and reports suggesting that it's going to be 0.5% or thereabouts levied on properties over £500,000. So on the face of it, this might be sold to you as a great idea, in that people buying a house under £500,000 won't pay anything, and those buying a house over £500,000 will only pay that rate on the difference above the threshold. But let's say someone buying a house for £600,000 will pay 0.5% or whatever it is on the £100,000 above that threshold. The problem here is this government, and historically, if they don't raise the revenue, which they often don't, that they plan to do through a new change, they will look at ways of tweaking it. Once it is in and people have accepted or reluctantly just been thrust upon that this is the new change, then if they don't raise enough revenue, they will look to change either the rate and or where that rate kicks in. And I'll show you why I think that in a minute. So whilst this might be sold to you in one way, they might then say, well, we're now going to have to charge just a smaller percent all the way down to a zero property value. Or they're going to have to pay an annual rate on the entire value of the property thereafter. And once it is in, it is very difficult for a government to take it out again. Now, let's look just at a few tweets and posts and discussions of what's been labelled as left-wing tax extremism by GB News. Let's have a quick look at some of these things that are genuine tweets that have been posted out and giving you some idea as to what changes might influence how this property tax, if it comes about, might change. So first of all, we've got examples here, and I'll link this video below. Capping tax-free ISAs at £100,000, making everyone pay inheritance tax by scrapping the nil rate band, raising council taxes, end primary residence tax relief, and tax on primary sales at a flat rate at 28%, scrapping lifetime ISAs, devolving income tax into raising powers for local authorities, raising capital gains tax on shares to 37% and real estate to 53%. Apparently some of these posts were deleted afterwards. Charging capital gains tax on death when moving out of the UK, slashing the VAT registration threshold to £30,000, meaning lots and lots of small businesses will have to charge VAT, making everything more expensive because everybody will have to pay the VAT on any products and services sold by those businesses. Scrapping business and agricultural property relief, hiking the basic rate of dividend tax, hiking income tax, hiking tax on second homes, charging national insurance on rental income, which is something I'll talk about in a minute. So all of these things give you an idea that if they do bring this property tax in, they might then realize it's not raising enough money, so they'll tweak it and change it, and suddenly it applies to everybody. And trust me, in the end, it will likely cost you even more. As a segue for a moment, I'd like to tell you a story. This is a genuine story from about 25 years ago. I was reminded of this story just recently when a client asked me about the right to be forgotten and what the law is. So about 25 years ago, a friend of mine was running a fairly small second-hand car garage. The way that he would find his vehicles and the way that he would make his money was quite interesting. He would look up either adverts of people selling their vehicles, or he'd find them on the street with a for sale sign in the window. This one vehicle that he saw, and he got talking to me about, just had an email address in the window. So it had for sale and just an email address. No phone number, but he wanted to talk to them because he'd sent an email explaining what he was doing. And presumably they just ignored him. But he wanted to talk to them so that he could just have this conversation. Anyway, so I took this email address and I start doing some digging online. Now, it wasn't easy to find, but eventually I linked the email address to a forum somewhere, which led to some other account somewhere. It might have been an eBay thing or whatever it was. One way or another, I traced back and eventually found who it was, found the name, and ultimately found a phone number. So I gave this to my friend and he phoned them up and obviously started talking to them about this vehicle. Now, obviously, they were a little bit alarmed and upset at the fact that they were called about this vehicle, given they didn't put the phone number in the window. Now, make no mistake, the phone number was visibly available online and it was in the public domain, so it wasn't exactly secret or anything like that, but it did highlight the concern that you can find these details about people online. And obviously this doesn't just apply to phone numbers, it applies to all sorts of things. Family members, where you work, where you went to school, even where you live, and all sorts of other details that you probably wouldn't want people knowing, especially in today's modern age with online digital theft and even in-person theft and harassment and so on, when people know all of this information about you. And so that is where one of the partners to my channels comes in, called Incogni, because they help to wipe and erase you from the internet completely, in line with the right to be forgotten that my client asked me about. And in doing so, this will help to keep you safe. If you like, they can't harm you if they can't find you. And so not only do they contact companies whose business it is to sell your information on, but they will do custom removals so you can tell Incogni specifically where you want your information removed from, and they will get onto it. You will get access to a dashboard which will give you an ongoing update as to which companies and which websites have removed your information from their websites and from their servers. This acts not only as protection from identity theft, but also scam attempts and other online threats. And the great thing is, as they're a partner to my channels here, you get a great discount of 60% off the annual plan using the code Daniel Shensmith at the link in the description below. And as soon as you start to see those companies removing your data, it will be that peace of mind knowing that you're being erased from the internet. So do check out Incogni at the link below. Don't forget the code Daniel Shensmith, and the peace of mind is worth every single penny. And so just to talk a little bit more about that national insurance on rental income, this is absolutely ludicrous because national insurance, whilst it is optional for people to pay at the moment, if it becomes a mandatory thing, because national insurance is supposed to be on earned income, but rental income is unearned income, although you still declare it and pay tax on it in the normal way. But if they force national insurance on all rental income, they want to squeeze another couple of £1 billion out of landlords, as if landlords haven't been squeezed enough already. Now, what I've said quite candidly is if they squeeze £2 billion from landlords, landlords will squeeze £2 billion from tenants. It will be passed on because some landlords can possibly absorb it, but I suppose very few. Some will decide to sell because they don't want the hassle and the stress of increasing rents, or some tenants just won't pay rents, and if they don't pay it, the properties might get repossessed and ultimately they get snapped up by bigger corporate companies and such. And for the remainder that keep the property, they will invariably increase the rent. So it will increase the rental cost for lots of people, and thus it's just not a viable option in my view. So back to this stealth tax, what it is and why I think it's a potential problem from a legal standpoint. And first of all, I give credit to the idea for talking about this to Damien Talks Money. Great show on YouTube. Do go and check him out. I'll link him below. He talks about this memo that was reportedly leaked between Angela Rayner and Rachel Reeves as ideas as how to raise more money, how to take more of your money away. Now, don't even get me started on number 3, which is at the top here, removing the dividend tax allowance, which will completely disincentivize anybody to start a business, but that's not what we're talking about here. We're talking about number 4, which is the idea to freeze the additional rate income tax threshold as we go forward. And the bit in highlighted here says, continuing to freeze the additional rate threshold in cash terms rather than uprating it with inflation from April 2028 could raise revenue and will be consistent with the manifesto. Now, what are we really talking about here? Now, there's 2 problems here. First of all, as Damien pointed out, some people may think that this only applies to people on the higher rate threshold. That's not necessarily going to leave you out, and I'll come back to that in a minute. But why? What is this, first of all, and why is it a problem from a legal standpoint? Well, a stealth tax, or fiscal drag, as these things are sometimes referred to, is when things generally get more expensive. We call that inflation. Your money is worth less than it was the previous year because everything goes up in value, and therefore the income tax thresholds are supposed to be set and adjusted every year in line with inflation. It was originally section 22 of the Finance Act 1977. That was since repealed, but it found its way back in, and this is why, with respect, I think most people just can't navigate law, because how on earth would you know where to look? You now find it in the Income Tax Act of 2007, sections 35 and 57, respectively. So section 35 is the personal allowance. This just sets out what your personal allowance is, i.e., the first amount you can earn without paying tax on it and thereafter. And in section 57, if I move across to there, we've got this bit highlighted here, the indexation of allowances. Now, if I make this big and change my screen a bit, you can probably see it. If I zoom in a bit more, you'll find very clearly here under subsection 3, for the tax year, the allowances, the amount specified, the minimum amounts, etc., they need to take into account the percentage increase in the consumer price index. They multiply it by the same as the increase in the consumer price index, as inflation. So if the general cost of things goes up, they need to increase these amounts by the same percentage points. And then when setting the amount and adjusting the net income limits, again, increasing it by the same in accordance with the consumer price index. So in essence, if they don't do that, that could well be deemed unlawful. Unless, of course, they change the law. Now, by changing the law, they are literally taxing you through legislation. And so if they were to apply this strategy in this reportedly leaked memo here and freeze the additional rate instead of increasing it in line with inflation, they make more money. So they make more money by you losing out to inflation. That is essentially what they would be saying on that plan there. But of course, they would need to change the law to do so. And as Damien correctly pointed out here, this very strategy has previously been described as follows. Without indexation, inflation acted as an unauthorized, unintended, and unknown increase in taxation. In other words, taxation by stealth. And again, as I said I would come back to, many people think that this might only apply to those in the higher rate thresholds. But this is the alarming bit. If we look at statistics, we can go right back to the 90s, 1991, 92. There's only about 3.5% in that higher threshold. But just look how this graph has changed in recent years, naming various roles and professions which are notoriously described as being underpaid and yet creep their way into the higher tax threshold. So what can we do about all this bad news and all of this sort of stuff, which may have a devastating effect on a vast number of people and businesses and the entire economy? What can we do about it? Well, if there's one thing we can learn by any of this, putting it all together, is you absolutely is more critical than ever that you are intimately familiar with the rules, the regulations, the thresholds, and what you can do to minimize your liabilities. Of course, I would never recommend anybody doing anything illegal, but what you can do within those legal limits, such as changing something to become your primary residence, for example, all of these sort of things. But even then, you need to do it with caution and you need to take professional advice because, as I said at the outset of the video, I think if this was anyone else, they'd be investigated, challenged, and then possibly taxed on it. So it needs to be done properly. You need to take advice. So this is where professional advice from a good accountant to look up all the rules and look at your situation and just find where you can find that extra money from. Knowing the rules is absolutely critical, but we are in a state at the moment with accounting rules, tax rules, and laws in general where, as a barrister, I think they are just not accessible anymore. Whilst there might be some rules and thresholds and bullet points and guides that you can find online, for some people, for many people, it is just incredibly difficult to digest all of that yourself and apply it to your own situation. That is why you sit down with an accountant to look at your finances and you sit down with a lawyer to look at the law. But all of those are also becoming increasingly expensive. But if there are three people you really should be paying in life, it is your doctor, your accountant, and your lawyer. And ultimately, they can tell you exactly where you stand. And so to assist you along the way, I'm going to put a number of guides and documents on my website, blackbeltbarrister.com. They'll be in the download section. You do have to register, but you don't have to pay. There is exclusive content on there, but these sort of guides that I'll put on there will be free. There's already a household budgeting spreadsheet on there. If you haven't done that already, you need to go and do that. So you need to know exactly where you stand before you can know where you're going forward. So please do go and download that, fill it in, be brutally honest, and you'll know exactly where you stand and how you can move forward. And so with that, please do like the video. Remember to subscribe to the channel. Thank you all so much for joining me, and I'll see you next time.